By the way, what is listing with stock exchanges? Can all the companies be listed in stock exchanges, whether it is compulsory or voluntary?
Only public limited company issuing shares to public shall mandatorily get itself registered with the stock, that is, get itself listed with the stock exchanges to facilitate the trading of shares. So you have to note 3 points here. Point number 1, it is only a public limited company, not a private limited company, right? Point number 1, it's only a public limited company. Point number 2, it has to issue share to public, right? Point number 3, when you say that it will issue share to public is that whenever it is issuing to any undefined group of persons and it exceeds 50 in number, 50. If it exceeds 50 in number, then we call it is a public issue, right?
What is prospectus and when is to be filed?
Whenever a company receives money from public, you have to file prospectus with SEBI, Stock Exchange and ROC, which shall be continued with the listing application made to the stock exchanges. Prospectus here is an invitation to offer to public to get the apply for shares, right?
So, merely by offering shares to public, I can get my public limited company listed with Bombay Stock Exchange, National Stock Exchange?
Good question. That's where your ICDR regulation, that is SEBI Issue of Capital and Disclosure Requirements Regulations 2009, will come into picture over here. Here only you have to decide which route are you going into. That is forms the eligibility criteria, right? Here you are given 3 routes. Namely, point number 1 is profitability route, number 2 is appraisal route, number 3 is book building route, right? Profitability route or appraisal route or book building route will basically depend on its features that we'll see shortly.
Yes, sir. This is always confusing. Can you tell me how do I choose my route? Which route is best for my company?
That basically depends on, take for example, profitability route. You have to satisfy 3 conditions over here. Point number 1, your net tangible assets should be 3 crores for in the 3 preceding previous years, right? Net tangible assets 3 crores in 3 preceding previous years. Net worth should be at least 1 crore in the 3 preceding previous years. So point first, net tangible assets 3 crores in 3 preceding previous years. Net worth 1 crore in 3 preceding previous years. Then you should have distributable profits in 3 out of 5 previous years. So by now you can understand that only a company, that too a profit-making company, which is in existence for at least 3 years, can only access this route. Further, there is a condition that at least the total issue size shall not exceed 5 times of the pre-issue net worth, right? So once you comply with all these conditions, you can take the profitability route.
Okay, so only 3 things: net tangible assets 3 crores, net worth 1 crore, distributable profits in 3 years, and one more, that my issue size should be less than 5 times of net worth. So what if I'm not able to comply with this? Can't I be listed at all?
There comes the appraisal route, in which bank or financial institution will invest in you. You and also not offer at least 10% to QIBs, that is called qualified institutional buyers. And you should also ensure that your post-issue face value of capital should be at least 10 crores. And further, you have to appoint compulsorily market makers for a period of at least 2 years from the date of listing.
QIB, market making, what's all this?
Simple. Mutual funds, public financial institutions, foreign institutional investors, venture capital funds, all these things are called QIBs, that is qualified institutional buyers. Right? So when such a credible person invests in you, the project or your company is a really good company. That is the impression which the market gets. So that is why we call investment by QIB. Further, you would have visited, like say, second-hand car showrooms, all those things. There you will find a board telling what is the buy price, what is the sell price. Okay, so there even you can find a market for the outdated Maruti 800, which is not available in the market. The thing is here, they will just link the buyers and sellers by offering a buy price and a sell price. So those who create a market for an outdated goods is called a market maker. So similarly, here the market maker are appointed for buying and selling the company's securities.
Sir, correct me if I'm wrong. Get at least 15% from banks, 10% investment from QIBs, ensure post-issue capital of 10 crores, and appoint compulsory market maker to issue under appraisal route.
Wonderful. What if you are not able to do the above mentioned things?
go for book building route. But what is book building?
Great answer. Here you have to remember three conditions, right? Condition number one, you have to offer at least 50% to QIBs, qualified institutional bidders. Condition number two, you should ensure that the post-issue face value capital should be at least 10 crores. Point number three, market maker should be compulsorily appointed for at least 2 years.
50% to QIB, 10 crores capital with 2 years market maker for book building.
Under book building, we invite bids from the investors. Say for example, we'll give a price band. Say for example, let it be 100 to 110. If we offer 100 to 110 as the price band, they will start bidding. Then we will finalize a price 105. If 105 is finalized, then we will accept those who have bidded at 105 and bidded above 105. That is till 106 to 110 also we'll get the applications, right? But the only thing is, for those who have bidded from 106 to 110, we will refund the excess money because we are allotting them for 105 only. So balance money, whatsoever is the difference, will be refunded back to them. Actually, the price 105 is fixed based on the maximum number of bids received.
You mean to say if many ask for 105, we will allot for 105?